proposed by Brazil's central bank. So this rule would ban the self-custody of stablecoins like USDT, them to only be transferred between licensed exchanges and service providers. So this revelation coincides with the Brazilian real reaching all-time lows against the US dollar, and many in the local industry are not particularly happy about this. So to help us understand what's going on here, we're joined by Rodrigo Borges, who's a partner at Carvalho, Borges and Araújo Advogados in Sao Paulo.
We making moves. We making major moves. We making moves. We making major moves. We going all in. Like we got nothing to lose. We making moves. We making major moves.
What is up, everybody? I'm Mr. Man. Welcome back to my channel. I've been banned. YouTube have banned me. These guys have banned me for 2 weeks. I've been on here, man, on Twitter. You know, I nothing I could do to figure this out in terms of getting my channel back, in terms of getting this channel back. So I'm grateful to have it back here. I'm not monetized on here. I come out here to give you guys great fire information for free. I'm not looking for nothing from none of y'all, but if you want deeper information, I do have a Patreon, right? Again, I'm not looking for money. You can join it for free. I do have a deeper section in there as well. If you pay $10 a month, you get access to many different sections within the Patreon platform. I discuss dates. I disclose dates. I disclose trigger mechanisms within those dates, how they can potentially affect your assets. I provide breakdown into what central banks are doing. We have town halls every Friday. We have individuals such as Jake Claver coming through. You'll find him on Twitter. He's a family office individual. He runs a family office. He deals with clients who earn over 21 million annually. That's who he deals with. We are having Shauna the XDC come through in about a couple weeks here. T should be coming through this evening to be talking to us from the development side of thing. We had Ray Fuentes from Link 2. Anyways, today we're going to be going over the Brazil system here and the fact that the stablecoin regulations that the central bank had brought out is causing controversy. And I'll tell you exactly what they're doing and why they're doing it, okay? So listen to this.
Back, everyone, to Brazil Crypto Report. I'm your host, Aaron Stanley, and today we've got a special episode focusing on a controversial new rule proposed by Brazil's central bank. So this rule would ban the self-custody of stablecoins like USDT, them to only be transferred between licensed exchanges and service providers. So this revelation coincides with the Brazilian real reaching all-time lows against the US dollar, and many in the local industry are not particularly happy about this. So to help us understand what's going on here, we're joined by Rodrigo Borges, who's a partner at Carvalho, Borges and Araújo Advogados in Sao Paulo. Rodrigo, it's great to have you on the show.
So Brazil may ban self-custody stablecoin transfers. Brazil is considering a ban on stablecoin withdrawals to self-custodial wallets as part of its efforts to regulate virtual asset transactions and increase oversight for foreign exchange activities. Really well worded. On November 2024, the Brazilian central bank, Banco Central do Brasil, issued a draft regulation proposing restrictions on transferring stablecoins such as Tether's USDT, to self-custodial wallets like MetaMask. Notice how they stated Tether's USDC. It's clear for all of them, right? If it's not the Brazilian real, it's clear for all of them. Outside of the Brazilian real, the digital one, when and if that comes, there's a potential for them all to be banned, okay? But notice they said USDT because so much liquidity is going through USDT. USDT mints as they feel, they mint as they please, and I'll show you this. Today is December 6th, literally 1 day ago, 1 billion USDT minted at Tether Treasury an hour ago. Fresh liquidity is coming into the market. Send that market higher. So liquidity, Tether's USDT is drawing in so much liquidity they can mint on demand. How do I know?
I met Sam, I met Alex from Celsius, I met every criminal who's now in prison, I met all sorts of people. It was unbelievable. I mean, imagine I meet the guy from Celsius, right? And he says, you know, I'm a new age bank, I take your deposits. And know what he did with the money? He bought mining equipment. See, I call that a nuclear duration mismatch, which means he has mining equipment and you can pull your money out any minute you want. Nuts. Absolutely nuts. Of course, he's in prison. So, and then I met the people who owned Tether. And let me tell you, at that time, there were all these media haters and all these haters, and they all said the same thing. They said they don't have the money, and it's a Ponzi scheme. So I met Giancarlo, and I basically told him the movie line. I said, show me the money. Do you have the money? And he said he had it. So they gave us complete access to due diligence and to see and prove that they had the money. Now, I would tell you.
So this guy, I know them all. I know Sam Bankman-Fried, I know Celsius, I know Tether. He knows all the scam people. He knows them all. He went to Tether and said, show me the money. And he gave us a thumbs up. Yep, good. Trust me, bro. Trust me, bro. Don't look here. Don't look any further. We're good. We're good. I got you.
When we found the money, and we found every penny, and they had every penny, but they had it in what I would call pretty God-forsaken places, right? They owned Chinese commercial paper at the time and other investments, because remember, interest rates were zero. Okay, interest rates were zero, and they needed to try to earn yield, and that's what they did. So I told them, after we verified every penny, I told them we would onboard them to Cantor, provided when these assets matured, this commercial paper matured, they would send the money to Cantor, and we would buy U.S. Treasury bills. So we're the world's largest wholesaler, and Cantor is a primary dealer. A primary dealer is one of 24 firms that does business directly with the Federal Reserve of the United States of America. So we are authorized by the government of the United States of America to create liquidity on U.S. Treasuries instantly, all the time, including during the pandemic, including during the 2008 crisis. The whole point of being a primary dealer is if you need liquidity on U.S. Treasuries, Big Daddy, the U.S. government, stands behind Cantor Fitzgerald and says, we are there for you. We will provide liquidity in every circumstance.
So they would unload them to Cantor, and Cantor would buy them U.S. Treasury bills, providing them an unlimited amount of liquidity. Right? That's what you said there, an unlimited amount of liquidity. Oh, I trust Tether. Tether has all the audits they say they have. Trust me, bro. So why don't you show me that audit? Why don't you show me that audit that you said you did? Where is it? You hung out with Sam Bankman-Fried. FTX went down in strategic fashion, man. You hung out with Celsius. Yo, they rug pulled people's money, my guy. And here you are talking about, trust me, bro, I saw Tether's reserves. Every last penny of it. Prove it to me. Prove it to me. Okay, so I had posted this one here, August 12th. This says the T20, the G20's think tank, explains the death of Tether and severe crashing of Bitcoin due to a crisis. Okay, this is them talking about. This is them talking, not me, okay? Get ready for the ride of your life. That's what I said in 2025. You've been warned many times now. Tether USDT, the death is waiting to happen. I'm not saying the death is coming in 2025, but 2025 will be phenomenal. It'll be phenomenal regardless. Anyways, listen to this. Listen to how they describe.
Widespread. BTI found 17 of the CMC top 25 exchanges to be over 99% fake, with many greater than 99.5% fake volumes, including 35 of the top 50 adjusted volume rankings. Griffin and Shams discovered trading patterns that cannot be explained by cash demand from investors, but were most consistent with the supplely based hypothesis of unbacked digital money inflating cryptocurrency prices. Analyzing the 2017 boom, they found that purchases with Tether were timed following market downturns and resulted in sizable increases in Bitcoin prices. A financial crisis could easily overthrow this disingenuous architecture, especially if the adverse shock is persistent and secondary prices and liquidity have been supported by wash trades. A real stress test could create a loss of faith in many of these arrangements, and in contrast, favor other digital assets such as central bank digital currencies.
So you heard it there. The central banks would prefer if people would use CBDCs instead of USDT. And that brought us to this, didn't it? The regulations will prohibit virtual assets service providers from enabling the transfer of virtual assets denominated for foreign currency to self-custodial wallets. So if you were utilizing USDT in Brazil, you are not bringing that out to your self-custodial wallet, your Ledger, your SafePal, your Decent, your Trezor, whatever it is. You're not moving that there at this point. There's too much outflows in terms of liquidity leaving Brazil, so Brazil's struggling because the foreign exchanges are not happening with the Brazilian real. They're happening with Tether's USDT. And as we heard, Tether's USDT has an unbacked reserve. Why do they say it's unbacked even though they say they have liquidity? Cantor, you said you saw the liquidity. You gave me the trust me, bro. You gave me that trust me, bro. Anyways, further in that document, they go on to say that Tether's only backed 74 cents to every dollar they have. Trust me, bro. Right? I'll let you hear why they're doing this. Why they want... Actually, not even let you hear. I'll let you read this. So, CBDCs would be more desirable is what they said, okay? So, 2025, Brazil prepares to launch digital currency by early 2025. That CBDC is coming out. The digital Drex by the central bank is coming out. Why? Because they're trying to cut off the competition. They own Brazil. They want their Brazil. They want their digital real to come out. And y'all have already seen the speculation buildup of cryptocurrency happening. Not because of this news. This news is for the central banks. They're licking their lips, rubbing their hands. They're lying, seeing zebra right in front of them. They're ready to pounce into Sahara and eat that succulent zebra. That's what these central banks are doing. They're trying to cut off their competition. Competition being outside players like Tether, who state they're one thing, but do something else. Okay, now I'm not. That's up to you what you want to decide to do and which stable coins you want to use. That's all up to you. At the end of the day, I will not touch that because when that implodes and the market comes down, anything tied to USDT, you better believe it's going to be bleeding. And that's the entire market. That's the entire market. The central bank of Brazil is aiming to launch its own CBDC, the Drex, by end of 2024. The Drex will complement the circulation of traditional money and promises to reduce operational costs, increase financial inclusion, and make wholesale and retail transactions more secure. Although the Drex pilot program is in its final stages, we expect the launch to be delayed until early 2025. You've already seen the buildup of crypto starting. Right? People think it's the meme coins. It's the meme coins. It's all speculative. It is speculative. But in the background, y'all don't know what's happening when digital currencies come out that these high net worth players can use. Right? These institutional investors can use to move money faster than you've ever seen in your life. The amount of money they're going to be making, the amount of money that's going to be moving, the amount of real estate because of tokenized assets they've created, real world assets. That value lives on the chain, man. And when they start moving real money on that chain, you better believe you're going to see a coming to Jesus moment. I guarantee you, you will have never experienced anything as beautiful as this. But it happens twice. It happens twice. This buildup is the speculative buildup, the early stage buildup still. There will be a pullback. And I'm talking macro here. So later on in the years, 2026, 2027, 2028, somewhere in those years, there is something lurking and waiting for us. There is something lurking and waiting for us. We've heard words of aliens, or my bad, UAPs, unidentified aerial phenomenons. No one's saying anything about aliens. Actually, there is talk about aliens too. So be mindful of that. Nevertheless, as Brazil is already at the forefront of many digital economy technologies, we think that the Drex will be adopted widely and will improve the country's business environment. More than 100 central banks represent 98% of the global GDP, have adopted or are considering adopting their own digital currencies to complement their economy's money supply. So these are all staying intra-jurisdiction. Right? When I say that, I mean they want the money, their own money, circulating in their country now, to create stability within their country. Think of it like staking. They're staking. They're taking their CBDC and they're staking it inside Brazil. Canada's going to be staking it inside Brazil. Inside Canada, sorry. USDC, Circle's USDC is now authorized in Canada, the first stablecoin. There is a stablecoin in Canada authorized as well, the QCAD, the Canadian one. You can stake that right now on Grapes as the platform. But that's what a lot of these countries are doing. They're taking their own CBDC and they want to build resilience for it. So they are staking it in their own country. So people buy, sell, and trade real estate, cars, whatever. And they will stake it and the real world asset will appreciate. They'll appreciate and inflate as they are right now. Because I'm sure you see that when you go to the grocery stores. The inflation of everything taking place. As you and me live in that world. Right? So, the BCB begins its journey towards the CBDC in August 2020. That's not important. Whatever. Okay. So Brazil's PIX payment systems. Right? We're talking about Brazil here. So Brazil has a payment system called PIX. And next to India's UPI, this is the bee's knees here. Kill cash, our credit cards next. You better believe they're going for credit cards. But Visa, MasterCard's not going anywhere. But what they're doing is crunching them out too. They're making Visa and MasterCard have to work to stay within their system, right? Because they want their CBDC. So these Visa and MasterCard will have to move CBDCs. We are staking this stuff. Although CBDCs will not offer interest, you'll have to get interest when you stake it in the platform. But the central bank isn't giving interest. So who's getting interest? And I know this because that's what I do with my DeFi. Right? I provide liquidity to pairs, to custom pairs that exist because I want money. I want daily money. And I would highly recommend everybody out there look into this. I would highly recommend that. In just 3 years, Brazil's hugely popular PIX payment system has become the country's favorite way to pay, replacing cash and wire transfers in many cases and now threatening the dominance of credit cards in the booming e-commerce sector. The instant payments designed by Brazil's central banks are a boon to online retail, helping with cash flow in a sector with tight margins, while undercutting the legacy system of banks and fintechs built on existing credit card infrastructure. We move in digital, baby. We move in digital, baby. This is coming from Routers. So to not just have a biased point of view from Routers, we'll hear it from... Who are you guys again? Here we go. The European Payments Council, PIX, the latest update on Brazil's leading instant payment scheme. The views are expressed in this article are solely those of the author and should not attribute to the European Payments Council, okay? I figure I have to say this now because I imagine reading documents such as this got my page blown up because some of these things I had taken as it was gospel. I may have taken it that it was gospel, or the individual who was listening to me read it stated that I was taking it as gospel. Either way, I'm going to read what they say. It's not whoever, they're not whatever, okay? Their views are not in this article of those authors and should not be attributed to the European Payments Council. It's just the author itself, the author's point of view, not the European Payments Council, okay? I'm not trying to lose my page again yet. I want to give you guys news. 4 years ago, the Brazilian Central Bank introduced an instant payments scheme called PIX. PIX has experienced remarkable growth since its inception. To learn more, whatever. PIX is considered a major success in mobile wallet-driven instant payments. Can you provide us with the most recent updates regarding PIX, including any statistics available? At its launch in 2020, PIX already had multiple use cases such as transfers between people, between companies, purchases at the point of sale, POS sale, like when you go Walmart, Canadian Tire, Kroger's, whatever, and you have your phone with you and you're tapping on that system you're tapping on is the POS system, the point of sales system. Electronic billing and payment and tax collection already. Cool. After its launch, new functionalities were developed such as payment scheduling, the possibility of initiating payments through third-party providers. Payment Initiator Service Providers, or PISP, and the withdrawal of cash from merchants and ATMs. Okay. We are currently developing new solutions for recurring payments, allowing periodic payments to be easily made with payee inputs and with a single authorization from the payer. In addition, we are carefully looking at the buy now, pay later. I remember this in the 80s, they had layaway and rain checks, and that's the same thing. You buy it now, you pay it later. I bought it, I put it on hold, and I make several increments of payments, whatever that payment schedule is that they put me on. It's not whatever we decide. It's whatever they put me on and I accept it type of deal. There's like monthly, weekly, whatever it is at that point. Because you're broke, you can't afford nothing, inflation's too high, the cost of living's gone through the roof, but you want whatever that is, so you're willing to create a payment plan for that stupid little thing. That's what buy now, pay later is. And we'll discuss the possibility of having a standardized buy now, pay later product for PICs at some point. We are also exploring new forms of initiation, near field communication, NFCs. Alongside all those developments, we are continually developing new solutions to add even more security mechanisms to the ecosystem and minimize frauds and scams. With all these features today, data from March 2024, PIX is used by around 153 million Brazilians, around 75% of the population, and 15 million companies. So they've already captured digitally 75% of the population with this new rail. In 2023, there were 43 billion transactions. Okay? Let me give you a visual of that. Okay, so 43 billion. That's what it said, right? Let me just confirm that. 42 billion transactions. Let's get a visual of what that looks like. So to visualize 43 billion transactions, consider the following comparison. If each transaction were represented by a single grain of sand, y'all know how small sand is, 43 billion transactions would fill 172 Olympic-sized swimming pools. Okay? Laid out end to end as dollar bills, 43 billion transactions would stretch around the Earth's equator about 164 times. If each transaction took just 1 second to process, it would take over 1,363 years to complete all 43 billion transactions. That's a lot. 43 billion is a lot. So we're going to go into why Brazil's doing this. I already gave an indication of why they're doing this. They're trying to tap into this market, get their CBDC out there by 2025, and then 2024, beginning of 2025, we've seen that already. They want to tap into their own market. They're monopolizing the market. They're injecting their own liquidity into the system. They're pulling it from the old system. They're sucking it out of the old with inflation there, making us pay more, and throwing it into the now, throwing it into what's being built, okay, this digital world. And now they're in the process of onboarding us all into there, okay, with this CBDC. Get ready. So listen to this. This is why they are doing it. I'll let them have this discussion and you can hear it, okay?
They're basically trying to treat the action of transferring, say I'm a client on like Mercado Bitcoin or something, and I have USDT on Mercado Bitcoin, and I want to send that USDT to my Ledger wallet. Like they are treating that as basically a FX transaction. So MB would have to have like an FX, essentially like be licensed for that type of activity, essentially to be doing FX activity, to be able to permit that. Irrespective of like whether I'm a Brazilian citizen or I'm somebody else outside whether I'm sending that wallet to or I'm sending that from Mercado Bitcoin to my own wallet in Brazil, or I'm sending it halfway around the world, they're still treating that as an FX transaction, irrespective.
Mm-hmm.
That's
right. That's correct.
So I have a lot of questions about how they can actually like enforce this, right? But I'd like to talk a bit more about some of the motives behind this. And I think some of the motives you're mentioning before is like, okay, like there's obviously this concern of they're trying to understand better like what the like how much money may actually be leaving the country in the form of stablecoins, et cetera. And then we're also hitting this point now where the real is reaching an all-time low, and like there's a lot of people trying to get out their money out of the country, right? And I think we've even seen that just the account deficits have been showing that there's been I can't remember the exact numbers, but quite a significant sum of reals that have left the country this year. Just in that context, it seems like, I mean, there's even reports of like central bank employees who are like trying to buy as many dollars as they can to try to like, because they don't have confidence in the real, so there's like, it's not a great look, right? We'll put it that way. But like, maybe talk a bit about like, what's like the motives here of why would they be proposing, and would they still be proposing this even if there wasn't kind of this mini currency crisis going on?
I understand what you're thinking is a relation between the moment that this public consultation goes on and the price of Brazilian reais, that it's too low right now. I think it's like R$6, $1. So it's the lowest price of Brazilian reais from history. However, to draft these resolutions, it's a
I'm not suicidal at all. I'm not. I love my life. Life is grand.
very complex work. So it's not that easy. And that's why I do not think there is a relation between the moment that we are facing, the volume of investments going out Brazil, the Brazilian reais going down. I don't think there is a relation between it. I think that is much more related than to the situation that we have now, the regulator, that is the Brazilian Central Bank, in charge of this market. And so, as he's promoting the public consultation regarding the license for the VASP, for the virtual asset providers, he's willing to regulate the entire market, or the most important and relevant part of this market at the same time.
Essentially, what he means is they're willing to monopolize the market. That's what he means when he says they're willing to regulate the market. They're willing to monopolize on it so they can get out all the other competition and say, you need to use this here. USDT, get out. USDC, get out. You cannot come in until we are strong enough as a country on our own, because we need trade happening within our country, within our jurisdiction, within our corporation, within our business, right? Within our DeFi business. We need our own liquidity happening at this point before it decides to leave out. We need it in here, and we need it within the BRICS system here before it goes anywhere else, right? They have their BRICS nations. They have the Brazil, Russia, India, China, South Africa, Turkey, Saudi Arabia, whatever else there is. There's like 39 other countries on the waiting list. I call them people because I'm looking at this as a business, as people, right? They've monetized and commoditized our world into a giant business. The corporation, the bank of America is what it is. America is now a corporation. It's been a corporation. It's a bank. It's a bank. It's a bank with people living and residing within that bank, creating liquidity for that system. That's what we are. We are liquidity making individuals and tools to keep this system fueled.
There is a rationale on that. They are trying to regulate this market in order to have more control. I understand that it has, if you think about how crypto, why crypto was created, and all the principles related to this market, I think that makes no sense, because you have more control of the government, and when you use crypto, you're looking for less control. You're looking to have more. To have more freedom to use your assets. However, it's the role of the regulator trying to adapt and adjust the market that is increasing to the regulation. So and this draft of this resolution, it's aligned with the best practice, considering anti-money laundering, considering better control. Because with this enforced, if it goes enforced, this resolution, the Brazilian government will have a much better control to avoid money laundering, to avoid counterfeits. I understand that there is the opposite of the principle that the crypto market defends. However, it's fair enough that that the government it's looking to regulate and to have more control on the market. So I understand what the central bank is doing.
I have a quick question about like other country, like what is there a precedent for other countries doing this? I mean, I know like, you know, there's always kind of been this cat and mouse game between, you know, places like China, right? Like China's imposed a lot of capital controls, and like people have been using crypto as a way to try to circumvent capital controls and stuff like that. But is there a precedent of like an international norm, like policy that's being like maybe promoted by like OECD or you know, the FATF or something about kind of standards around like this particular issue? Like, is this something that's been sort of shopped around, or is this the Brazilian central bank just really kind of they're saying like, look, this is sort of a situation that's unique to us, so we're going to do what we think we need to do to kind of fix things?
There are a lot of discussions around the world regarding the regulation of stablecoins for the same concerns that the Brazilian central bank has, to have more control and all these things. However, I do not know, I'm not aware of any other jurisdictions that already has a resolution or a draft of a resolution so complete, so strong or hard for the market as the Brazilian central bank has. So I do not know. It's not on my concern that other jurisdictions has something close to that. But
so there you have it. That's what Brazil's doing. Trying to cut off all the competition, monopolize the jurisdiction, the business, if you will. That's what I'm trying to do, essentially. Not necessarily Brazil, but I mean from my own standpoint too. I'm trying to turn my DeFi into a business. And I want to open that business somewhere else, overseas. And the reason I want to open it somewhere overseas, because if I have an investment over there to a specific, a certain amount, you can go and start collecting passports now at this point. I'm a citizen of that when you invest a certain amount in other nations, right? I know in Dubai they said they're crypto friendly there. There's a video I posted of them saying, you know what, if you're religious, we got churches. Come on in, we'll help you find one. If you're looking for school because you got kids, come on in, we'll help you choose them. We'll help you get set up here. We'll help you choose houses. We'll help you with whatever you need. We are a crypto-friendly place. Okay? So, Brazil is getting ready for this. Brazil is getting ready for this in 2025. They're going to cut the snake's head off of the old world, and they're introducing this. I'm not expecting the pullback yet. This is going to be such a euphoric time, and you better believe I'm ready to pounce on this. I'm ready to capitalize on this like you've never believed in your life. Whew. I hope you guys are ready for this, man. It's going to be epic. This isn't just happening with Brazil in terms of their CBDCs coming out as well. There's others. It's not just private money anymore, right? You feel me? It's public money. Public money, 43 billion transactions, 42 billion transactions within that PIX system. Remember how big that globe is. That globe or not. I don't know if there's a globe or not, right? 172 pools filled with sand. Anyways, get ready. Get ready, folks. Get ready.
Jackpot, bitch! Mainnet, bitch! I'm rich, bitch! Millionaire, bitch! Billionaire, bitch! Trillionaire, bitch! Quadrillionaire, bitch! 50,000x, bitch! 100,000x, motherfucker! Ching ching, motherfucker! Slice and dice, bitch! Unlimited and boundless prosperity and riches is coming your way now. It's coming your way, motherfuckers! Get ready!
We making moves. We making major moves. We making moves.